Gang. Okay, and non-gang members, everybody. I want to show you what's going on in the market. Now we've had a pullback. They've been having a real problem, as I say, right in this area right here. Now why? Why can't the market break out and run? Well, it's real simple. Because I'll show you. IWM, here's the problem. See it? If I pull this back for a year, you see this mess in here? You have this big run. Now watch the S&P. Watch the difference. So you don't see that mess, do you? No. And you don't see it in the banks. And you don't see it in the semis, the leaders. You only see it in the most important category, IWM. This sends you a red flag. This sends you a message from the market that this mess we have right up in here is telling you the internals of the stock market are having a problem. So what we're going to do is take advantage of that. So let's go put up SPY. In every one of these pullbacks right here, right? Every one of these pullbacks, we caught them. All right, every one of these pullbacks. Because these pullbacks represent about 4%, 4.5%. Why? Can it go any further than that? Well, it's really simple. Because you have money coming into this market at 0%. The hedge funds, that's what the IWM tells you. See, when you got the IWM, it looks like this. Pretend this is the IWM. And the IWM is looking like this, and it's broke its nice trend, like this. Broke its nice trend. That explains to you they got a problem. That means that the institutions, okay, they're pulling their money out. So you can see how we got the nice distance between here. We had a nice distance between here. These are about 5%. That's around 5. This is 5. And this is 4. This distance right here, between here and here. See it? So what should happen is we'll make money. As soon as we see this turn red, we're going to short it. As long as this guy is crossed over the yellow. See it like this? And she's breaking over. And then this turns red, we're going to short it. It should come down, and it should stop at a higher point right here. But here's the thing, though. Where I'm curious if it's going to pull back, yes, we'll short it. But between here and here, see the difference? There's the problem, right here and right here. That's about, this is 4, this is about 2. So you can see this is really affecting the stock market. That's why we got to be very, very careful. Now, what we'll do if this happens, we'll just simply short it, and we'll go and switch to SH. That's an inverse right here. So this is going to be very easy to do. We're going to wait until we get 2 green days like this. 1, 2, and we get this guy a crossover like this. When that crosses, you get 2 green days, and we'll put a stop right about here. Here's our stop. And we take very little risk, and we'll short it. And hopefully the stock market gives us a 10% correction or more, and we'll make quite a bit of money. But we'll control this very nice. Now, in the meantime, if you want to start over here as traders, you start here first. Then switch over here later on if you want. Either case, okay? So that's it. So that's what I'm preparing for. I will be ready for when the stock market makes more than a 4% correction. And how will we know if it's going to make more than a 4% correction? Like all these other corrections right here, what's the message going to be? It's going to be from IWM. IWM will tell us. And then what will happen is we'll start seeing XLF do the same thing as IWM. We'll see the XLF start breaking down. And once the XLF starts breaking, it breaks through this 200-day. Until that breaks through the 200-day, you're not going to have much of a pullback. This would be the key. This will give you a 12%, 15% pullback if it breaks through here. All right? So we can start out slowly, shorting, anticipating 4.5%, 5%, but again, on the S&P. But it won't do any more than that unless this breaks right here. Right now, IWM is telling us there's something going on and to be cautious. There it is. Okay? See you on the charts.